Good day traders, Stacey Burke from Stacey Burke Trading. Daily FX levels for the British pound crosses for Friday the 17th of April. No more major economic data to be released today. That's what has all been completed for the week. When we go to our charts, first up is our British pound Aussie dollar. We can see that yesterday the pound Aussie rolled over just underneath of that previous breakout level from last week, breaking our micro trend line, dropping down, consolidating, and then dropping into that lower 250 pip box, breaking our other little rising trend line, consolidating now inside of that 250 pip box. I'll just blow this up for a second. We've got support down around that 95.50 area. We could see this market either find resistance at 97.50 or possible retest above that level, or drop down, stopping out lows of the week on a continuation of that move, dropping through the middle and completing a measured move down. When we look at our 15-minute chart, we can see that yesterday that market rolled over at 98.50, consolidated before dropping down another 100 pips and then 150 pips into the open on the rollover today. Again, we'll just take a look at that. There is support potentially around this 9600 area. When we blow that chart up, we can see that the market went sideways, pinned through the lower box, and is consolidated, and potentially now as we head into the Europe Open, we have a bit of a double tap formation with a pin hammer. This 96.50 area could be our support level for a continuation long, or the market may fail and break down and retest that 9600 and retest the stops below that pin from the Asia low at 95.60. Currently, again, we're testing that upper boundary. We're inside of the 00 box. If we look at this box, this market has been in the lower half. We could see this market break above, find support at that 96.50 and continue the move back up inside of yesterday's range. Next up is our pound Canadian. We saw also that market move upwards and was squeezing in before breaking that micro trend line and consolidating. We had an engulfment short through the U.S. session yesterday and then dropping down that 7,500 area again, possibly acting as support. The market took out Wednesday's low, consolidated inside of that 50 pip box again. As we head into the Europe Open, we see that this 7,500 area could be acting as support, and we see a pin hammer forming currently at the first candle of the hour. This market could, we'll just scrunch this up, could continue its move down. There is plenty of downside, and there are stops below at the 74.50 area as well as the 7,400. Currently this market, even though it's consolidated in that 50 pip box, has been making lower lows, and we do have a micro trend line that this market is currently respecting. So unless we see this market break through and retest and continue back up, this market is creeping down and could break into that lower 7,500 pip box and find resistance below those numbers. Pound Swiss, again, similar. We saw this pair consolidate inside of that breakout from last week. That market has been moving sideways inside of that peak formation from earlier this week and the lows that have formed. Currently we have stops below this 2040 area and above the 2140 area, so we're in a 100 pip range between the 50 pip areas. And we look at our 15-minute chart, we can see that a bit clearer. When we see the market has traded around that median price of 2100, 2050 has acted as support 2 days in a row now. Originally that was a resistance area. We could see this market retest above 2100 and continue its move up or roll over and retest yesterday's lows. Next up, pound yen. This pair has again been trading in a sideways range underneath of that 3,500 area and just above the 3,360 area. It's turned off of that 3,500 area twice and consolidated. When we look at our 15-minute chart again, we can see this market is already on the move today, breaking out of a small descending triangle pattern as we head into the open of Europe. That market has the potential to return down to that 3,400 region, stopping out traders who are long from last night's session. Just put a little green bar down there. Currently this market has almost made a 50 pip move down as we head into the second candle of the Europe Open. If this market was to find support somewhere above this breakout area, we could see that market retest that breakout and possibly even retest the highs of the day. Because it's been in a trading range, again, I would stick to the extremes. The market could continue to fall and take out yesterday's low, but we could also just see this market trade sideways now around 34.50 or layer underneath and roll over. If we saw this market break back long and pull up and use 34.50 as support for a continuation back towards the high. Next up, we have the pound New Zealand. And again, this pair we saw squeezed into the peak heading into yesterday's session. It also gave us a bit of a micro double top, finding resistance off of that 9,750 area before rolling over and now layering on top of this 2,800 box. This market has the potential to do a continuation for a measured move all the way back down to stop hunt traders who are long from the beginning of the week and even possibly test beyond that at the low of the week. 500 could act as a target initially in this 750 area. If it was to break, I would expect this market to continue down. When we look at our 15-minute chart, we can see that this market is pinned lower, and had a creeping trend down. It's since now testing that 800 pip area, but we do have gaps below that from earlier in the week, and we have stops down around that 700 pip area. This market, again, if it fails to get above that 800 area, could continue back down, testing the lows of Wednesday. Lastly, we have our British pound. Our British pound we saw in that running wedge pattern make a high earlier in the week, drop down, retesting that 2,500 pip area. It is looking like it's finding some resistance to that level. We now have stops that are below that 2,400 pip level. This market has the potential to go all the way back down to the 2250 area. If this market was to consolidate and stay sideways, it would be a fairly tight trading range. It could also head back up towards the stops that are above 2575. Currently, it has been making lower lows. We saw the big reversal peak formation happen heading into Thursday's session. That market took out Thursday's low. This market still has the potential to possibly target yesterday's low again. When we blow this chart up, we can see this market has already possibly given us a peak formation for today's session. And we have stops down at yesterday's low. This market may pull back up to 2,500, giving us a stop hunt on traders that are short before resuming its move back down to the lows. So hopefully you got some value out of today's video, traders. Just in closing, quote by Richard Dennis: trade small, because that's when you are as bad as you are ever going to be. Learn from your mistakes. Richard Dennis. So on that, traders, keep it simple. We focus at the high and the low of the day. We look at the equity market opens. Stick to your round numbers. Look for the price action that will confirm your entry. Look for asymmetrical risk reward, so you're targeting 3, 4, 5 times what you're risking on the trade. Keep your losses tight. Keep it simple. Stay in the trades. Stay in your winning trades. Don't get out too early. Have a great trading day, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.